All right, it's Wednesday, June 14th, just following up on the SPY. You can see here, I bought puts here at this upper red line, anticipating a move lower to take out some liquidity. Price is now, it started lower, paused a little bit, and now we're taking out the liquidity area here, our first target, this lower red line, this area, and then continuing lower here. I just scaled out of these options. I bought the 435 puts at 152. I scaled out of a lot of the position at 203. They're at 205 right now. To set up kind of a no-risk trade. We have the Fed announcement coming up. I have to make a decision, right before the announcement. Do you want to just be completely out of the market or not? There'll be some volatility in play, but there's definitely a chance we're failing on this day, but maybe not by the end of the day. It's just very hard to say at this point, if this is going to end up, if it ends up with a nice shooter bar, then we should kind of follow through lower to end the week, at least to fill in some of this gap area, but that's tough to say. But for now, the short-term play, just given the way I like to view structure, is we made that nice directional move up to start the morning, and there were some very good long trades there. At that point, you're kind of out of most of those. And then once I saw this kind of pullback take place, this did not look like the orderly pullback that was going to come and take out the highs of the day, especially on a Fed-related day. So I used an opportunity here on this rally to buy some puts. If you look at the 1-minute chart, price was kind of came down. This was not the orderly pullback to, work all the way back to those highs. You could almost see this was kind of like an inefficient move up there, and it came all the way back and filled that in. So this whole move up was kind of a fake move. Anyway, I was anticipating coming down and taking out this liquidity, and now we're starting to move lower. So we could be moving towards the lows of the day. That's kind of the next target, since this liquidity area, it could have just bounced from there. It doesn't look like it wants to do that. So it's certainly heading lower, which is nice. And we're just going to have to see, bottom line is on these type of days, after you have some exhaustion risk to the upside, at some point you start making higher highs and lower lows to kind of shake out some liquidity, some stops. And that's kind of the broadening action you're looking for. So on this market here on the 1-minute chart, you made the higher high here, and then once it kind of pulled back a little more than it should have, I sense that once we're going to make some lower lows as well, even if we're going to eventually head up higher. But there's going to be a lot of volatility with the Fed announcement. For now, we're heading lower. Options are moving up nicely to 205. Again, bought those at 152 and just scaled out of the position to set up a no-risk trade. And, you'll just have to see how you want to manage this type of trade here, given a Fed announcement coming up. And you're expecting volatility, but we'll see how that goes, and we'll see how the day ends up as well.